Senior Employee Benefit Consultant here at Drewberry. Today, I'm going to be talking to you about group health insurance. We'll be running through some key considerations and factors that you need to consider before taking out a policy. So first things first, what is group health insurance? It provides your employees with access to private healthcare facilities. So it gives them more choice and the sort of facilities that they can choose from. It also provides them faster access to services than the NHS. And in addition to that, in some instances, it gives people access to drugs that they otherwise wouldn't have access to if they went through the NHS. So it's important to note at the moment there's nearly 8 million people in the UK waiting for non-urgent operations within the UK. So private healthcare really fills that gap and gets your staff back to work faster than they would be otherwise. It's important to understand that private healthcare doesn't replace the NHS, it's designed to run alongside it. And there are different products and features, and some of the key features on there are day patient, inpatient and outpatient treatments. So breaking it into two sections. So with day patient or inpatient treatment, that's generally where you need a hospital bed, whether that be that you go in for day surgery or that you have to stay overnight and you might stay in hospital for a long period. They're typically covered as core cover on private medical insurance plans. The other section is outpatient treatment, and that is when you're literally going in and out seeing consultants. And with outpatient treatment, that can be limited on these plans, or you get up to full refund. It depends whether you want to play it out. And that can help control the cost of the plan. So some insurers will say, right, you get 2 outpatient visits in a year, or £1,000 worth of outpatient treatments, and I would say, or full refund. But of course, like any product, the more cover you get, the more expensive it's going to be. But a comprehensive policy would obviously cover the inpatient and day patient treatment as standard, and then the outpatient treatment would also be on a full refund basis. There are other factors to consider when it comes to the type of cover that you can get. So you can build in things like comprehensive cancer cover. You'll get sort of an NHS support option as standard, but if you want to build in really comprehensive cancer cover, that's an option. Also with things like mental health and therapies, these can all be added. But yeah, like any product, the more features and more cover you put in place, the increased cost, and vice versa. If you want to control costs, you can taper that cover down. So there's lots of different options available to you out there. It's important to understand that group health insurance doesn't cover every condition for your employees. And conditions can generally be split into 2 different areas: acute conditions and chronic conditions. A chronic condition is a medical condition that can't be solved, they can only be treated. So think, for instance, things like diabetes, asthma. Again, they're treated with the NHS as normal. Where group health insurance comes into its own for your employees is when it's an acute condition. So say, for instance, somebody breaks their leg. They're going to get access to the consultants, to the operation, to the physiotherapy, and be fit, back and healthy much faster than they would be via the NHS. That is an acute condition. Think, for instance, again, something like someone has kidney pain, for instance, they can go and see a consultant, get their scan much faster, with a view that it can be cured, you're back up and running sooner rather than later. So these plans, they say, not designed to cover chronic conditions, but it is important to say that some of these insurance schemes will cover flare-ups of chronic conditions. So say, for instance, someone has an asthma attack and ends up in hospital, that could potentially be covered. It just wouldn't cover that ongoing management of that treatment, and obviously all treatment is subject to the insurer's terms and conditions. There are different ways in which the schemes can be underwritten for your employees, and what you select as an underwriting basis can have a big impact on premiums. So broadly speaking, there's 3 different options that you can go for. The first being full medical underwriting, which is when an employee joins the scheme, they have to complete a medical application form, normally sort of 15 pages long, disclosing their entire medical history. And what the underwriters will do, they will review the employee's application form. If someone's had a bad leg in the past, they might just say, right, all treatment for this employee's left leg is excluded indefinitely going forward. So that's how full medical underwriting works. You disclose everything you've got, and it's reviewed by an underwriter, and they may apply exclusions to the scheme for that individual. An alternative is a moratorium, and how that works is, for the past 5 years of them joining, any pre-existing conditions are excluded. So yeah, if something hurt your leg 4.5 years ago, that won't be covered on the scheme, even if you are feeling much better. But what some insurers do, they will offer the option so that if that employee had joined the scheme and then went 2 years without seeking any medical advice on it, so say for instance that example I said about someone hurting their left leg, if they once they join the scheme, they go 2 years without seeking any treatment, medication, advice of any type around that, then it could be included going forward after that 2-year period. So there's different options that are available there with moratorium. That is the most common way these schemes have been underwritten, just because people aren't having to disclose their entire medical history. And what essentially happens is at the point of a claim, that is when the underwriting is being done. They'll check for GP reports, or you fill out a declaration to say, I've not had anything in the past 5 years, then you can potentially get your treatment if it's eligible. Another option is medical history disregarded. That tends to be the sort of Rolls Royce of underwriting, and you normally need at least 15 employees in the scheme at the point it's set up to be eligible for that. And that does exactly what it says on the tin. It disregards any previous medical conditions. So if someone did hurt their leg 4 years ago, it makes no difference, they can get treatment on that straight away. The downside to that is there is a considerable cost associated to it, and what you'll find is when you set up the scheme year one, a lot of people will go and get treatment that they've been putting off for a while. So it can impact your premiums going forward, because generally these are claims rated schemes. So yeah, different options there. And with medical history disregarded, it's also important to note that it still won't cover chronic conditions. So yeah, it doesn't cover chronic, but anything that comes up that you've had in the past that isn't chronic, they would cover going forward. So the different options are available to you, and it's really important to consider each of those and the potential implications it can have, and of course the cost when setting up a medical insurance scheme for your employees. So how much does group health insurance cost you as an employer? There are some main factors that have an impact on the cost. The first being the size of the company. As with anything, generally with economies of scale, the larger the company, larger the membership, the lower the premiums tend to be. The age demographic of the company has another big impact on it. Tends to be that older employees are more likely to claim. So the older the average workforce, the more expensive it could potentially be. Location also has an impact. So when setting up these types of schemes, you select the type of hospital list that you want to put in place for your employees. And again, the top level list, so if you're based in central London and you want the London care lists, it's going to cost more than if, say, you're based in Scotland or Wales, where those facilities aren't really there. So that has a huge impact too. The other impact is around the underwriting terms. So if you go for a medical history disregarded scheme, which is sort of your Rolls Royce of underwriting, that's going to cost a lot more than if you've got full medical underwriting or a moratorium in place. So there's different options that are available there. Other factors that can potentially impact the cost of the insurance are things like your outpatient limits. So if there's a full refund for any outpatient limit, that's going to be more expensive than if it's, say, limited to 2 different outpatient visits in the year. Other things that you can put in there are things like therapy, so say physiotherapy. You can include that or not include that, limit sessions if you want to. You can build in a claims excess, which works in a very similar way as it would do with your car insurance. However, typically claims excess on these types of schemes, you pay it once in the year. There's lots of different options, so like mental health cover, the full top level cancer cover. The more of these features you build into it, the more expensive it's going to be. There are also cost limiters that can be included on these schemes. So say with the excess, you could put in a high excess and stop people claiming as much, but then do you want to do that? Is that really what the policy is in place for? So there's lots you can play around with these schemes to make it affordable, and there's plenty of options out there around setting these schemes up, how they look like, how that fits in with what you want to provide to your employees. I mean, everybody would love to provide the best scheme they possibly could, but actually, if we can't afford that, let's put in something that's reasonable, that does give our employees care. There are certain tax implications with group health insurance. So from an employer's perspective, the premiums you pay as an employer are typically treated as a business expense. It is, however, what we call a benefit in kind or a P11D benefit. And what that means is at the end of the tax year, you as the employer or your accountants will need to do a P11D return to HMRC, and again you would typically pay employer national insurance contributions on the value of the premiums. From the employee's perspective, the employer paid premium is classed as earned income because it's a P11D benefit in kind. So say for instance the premium a year was £1,000 and you're a basic rate taxpayer, the cost to you as an employee would be £200. And how it is typically taxed is at the end of that tax year, the employer sends off the P11D report, HMRC would then amend the employee's tax code and they deduct that tax charge, whether that's say £200 in that example, and then spread that cost across the 12-month period in the tax year. So it isn't like they have to write out a cheque, it's all done via PAYE and they just amend the tax code. So there are a few tax implications. It's important that you as the employer understands that, and also that your employees understand the tax implication, because some may not want to incur any tax charges. But if you need any sort of advice around the tax implications, we'd recommend that you talk to your accountant. So when setting up a group health insurance policy for employees, there are other additional benefits that some come as standard and some that you can add onto the scheme. The first being like a virtual GP service, and this has become a core part of any employee benefit package. You can get virtual GP services included with other group insurances like life cover, income protection, critical illness. The reason being is within the UK, getting an appointment with a GP via the NHS is extremely difficult. And for some of us it is, for some of others it isn't. It's a postcode lottery. I know firsthand for people that in my family that they'll call their surgery and they could be 20 in the queue, get to the front of the queue and they're told no appointments, so they call back tomorrow at 8 AM, which is really no good. So what these schemes do, they include virtual GP services. Normally an app, some of the virtual GP is built into the app that the scheme will use for you to make claims as an employee. Others you download a separate app for the virtual GP service. And what it means is you can just get access to talk to GP much faster at your convenience. So you go in, select an appointment time, date, and then you can either do it virtually or over the phone, so like FaceTime or a phone call. And what that can give you access to is treatment much faster. So in some instances that can refer you straight through to make a claim on the health insurance. So for an employee it's like, right, I'm not having to wait days to talk to my NHS GP, I can just get referred via the virtual GP. In other instances, as I say, for instance, someone comes down with something like tonsillitis, they can of course then speak to the virtual GP and get their prescription from the virtual GP rather than having to go via the NHS. So they're really valuable services, virtual GP, and they tend to come as standard within the group health insurance offerings for employees. Other benefits that can be added on, one being things like dental and optical cashback and prescription cashback. So each year there'll be a level of cash that someone can claim back through from the scheme. They can do that online via the app. Just provide a receipt and get your treatment back. Most of them they will ask you to say pay the first 20% of treatment or a small claims excess to do it. But you can claim those back through schemes. Other additional benefits, say for instance you can choose to add family members on as an employee. Obviously as the employee you decide to set the rules of how that works. Can be employer paid, employees can fund it via payroll deduction. So there's different options that are available there. Another really valuable benefit that can come with group health insurance is like a second medical opinion service. So say for instance somebody is going through cancer treatment, they've got their treatment plan, medication, etc, etc. You can use this service just to get a second opinion on what's being done. So there's thousands of specialists around the world that will be able to offer their very well informed and educated opinion on what your treatment plan is, and they may potentially request that some tweaks are made. And obviously it is just their opinion, it's an opinion service, but it just helps give employees peace of mind